Hi everyone, I wanted to put a quick video up here because we were talking about this yesterday on all sorts of different ways in terms of trade entry and working your way backwards. And I've got a routine every Friday. I basically go into my book and I look at all the open positions and make sure that there's no heavy gap risk over the course of the weekend. That when I'm taking any kind of time off, basically I just want to make sure that everything is covered. What will happen is towards the end of the week I might develop a few positions that are very close to their entry points, and if there's not enough buffer to my target or whatever the case might be, I might decide that I would want to just basically exit prematurely. So this is the Aussie yen right now, and Aussie yen is just like any other currency pair. It's just got its own characteristics, and so price action is price action. And this one in particular, just because of the weight of the pair, tends to exhibit a lot more technical behavior than maybe some of the other crosses do. But wanted to just talk about one of the open positions I had, just basically because there was just so many opportunities for entry on this thing, and people tend to get confused in terms of the actual trade construction process. So I'll just sort of brush over mine really quick and show you just generally how I do it. Now there's a couple different ways in terms of entry. Sometimes I'll identify the entry point ahead of time. Sometimes I'll identify a profit target ahead of time, or sometimes I'll see a pattern developing that just based on a lack of other factors or other factors that I'll decide is whether or not it's something that I want to basically hop on into. So when I opened this chart earlier this week, I noticed something sticking out to me right away, and that's just basically this spike base here up in this range, 8,900 level. So when I say it's a spike base too, we're also at the end of a trend here, and we did get a really sharp drive lower, and we've got other points of reference higher on this other leg. But for the time being, this is what I really care about, because with any spike base, what you have is these little topping structures here. Basically, these are just renewed selling pressure. Okay, so you've got a spike, sharp move lower, basically. Doesn't necessarily have to be a spike, just a sharp move. And then you've got selling pressure, selling pressure, selling pressure, selling pressure. And so this one in particular is the one I really care about the most, because it basically shows me that when price headed back up into this level, there was a renewed interest to get back in and sell again. So so this level obviously is important to me. So it's also a very good magnet on any kind of retracement. And I had multiple confirmations in terms of this move or this leg higher coming in this week, and it wasn't until after we finished this move. And once again, it's all back to some of the basic stuff that we discussed on this site, namely inner trend lines. So this line right here is the one that I caught on to, and basically made the decision to take action. And all I really saw here was pretty simple. I mean, it's just another inner trend line. We're cutting off the tops here. We're going inside of price. We're looking for multiple hits, confluence, and we're just on an hourly chart here. And then finally, we got our retest. So my signal, if you want to call it that, was just basically constant rejection of this line in this range. Okay, and so you can see down on the timer here is we're around 1500, and we basically just came up at an outside bar. I'm not a huge fan of bar patterns, but when you're bouncing off of a level like this and you've got continuous rejection, usually that's more than enough for me to take action. Okay, and so action was taken just right in this range, right around 87.38, and trading higher into the rest of the week. Okay, and then yesterday I got more confirmation on this. See here with this trend line, okay, which actually isn't as common as something like this would be. Okay, and the reason I say that is because we've got some clean registers off the back end here. Okay, but this is an outer trend line. Okay, we're literally drawing these 2 points off of this peak here. Okay, and this is normally how I like to use trend lines in general. When we're fading them on the first hit, I pretty much don't fade outer trend lines at all. I'll fade inner trend lines. Okay, so for instance, this point would be a rejection that I'd consider. Okay, but it's an inner trend line once again. Okay, outer trend lines not so much. Outer trend lines, they can come into play, of course, but just they don't have that level of conviction that inner trend lines generally prove to me. So basically, so this was pretty much all there was in terms of a catalyst. And I had this magnet up here, which is actually probably the more important factor that came into play here, because I know this is a magnet. I know it's a strong area. Just based on what I was saying earlier, spike bases just generally do. Spike bases aren't as common as other price patterns, and when they do happen, there's certain pretty reliable behaviors that that are exhibited around them, just because once again you have this renewed area of pressure. Okay, and so it's just as much of a magnet on the way back up again as it is a rejection point on the way if we were to go back down. Okay, so I'm basically just playing into this magnet. Now it's Friday, and again, I was saying earlier, I basically came in here today to just evaluate my positions and see where we're at. So there was a couple things that I could do. The first thing I'm going to do is just draw up a regular measured move from my the trend line that I actually ended up using as an entry point. Okay, and to do that, I'm just basically taking my crosshair. I don't know if you can see the mouse here. Taking the crosshair and lining it up with this absolute low. And we're using the most conventional standard of doing this. This is the one that I tend to favor the most, just because it's the most widely used. And in general, this is the version or variant that I tend to rely on the most. And that's basically just going from the point of the trend line directly above it down to the base in terms of that. So target on this was basically these highs right here. And I've also got a decent buffer. I know I've got, again, my magnet is up here, so I've got a reasonable expectation that price is going to continue up into this level. Okay, and I can also put a good stop loss on here without having to feel like I'm ripping my hair out. I'll talk about that in just a second. But first and foremost is find a profit target. Okay, so my profit target at the beginning of this week was up here, okay, and we've still got a reasonable expectation that price is going to go up there, maybe even higher, but for now, without cutting out too much guesswork or anything like that, I've got at least the golden ratio up at these highs here, which is a really good target, at least for the end of the week, okay. Now this could be extended, of course, okay, and for this to move even higher, it wouldn't surprise me, okay. And then we've got, you know, our two other measured move levels happening up here, okay. But they generally are a good point of resistance, and actually I posted on Twitter at GBPJPY trade yesterday that pretty much nailed the golden ratio. It was a profit target, and used it as resistance and came back down again. It was also filling a gap. We like when these things line up. So that's basically it. So you can see over here we've got, you know, we're toying around with these highs, and whether it be this level or the highs themselves, you know, one way or the other, we've got some form of rejection here. So if this were to continue, what would we look for next? We'd basically look for this high to be used as support. Okay, this level in general, we want to see this getting used as some kind of support mechanism. Okay, and so stop loss on this trade. Basically, you know, when you're entering off of inner trend line rejection like this, you basically want to leave enough room for price to pull back again and move higher, okay, just like it did up here. So in other words, if you were in the market over here long, okay, your stop needs to take into account the fact that price might recoil back into this range again and use this once again before it takes off, okay. And we've also got a decent line of resistance over here as well. You can see if you go back, you've got confluence, hit, going back. Okay, so it's a decent line of support. And in fact, the market might have just been waiting for that to get hit. Who the heck knows what's going on here intraday? Okay, but beside the point, you have to look at the more macro picture, which I basically just talked about. So stop loss on this trade is just basically going to be below, you know, leaving enough room for that, which takes you basically down into this area. Okay, right around 86.90. Okay, one thing I like to do, because one thing that does commonly present itself is if you go swing high to swing low, okay, 50% pullbacks within a trend aren't uncommon. Okay, what'll happen is you'll come back up and you'll come down to the 50% level and then shoot back higher again. Okay, and if you go through your chart and look at in the context of a trend, I'm not talking about anything else, but in the context of a trend, just do swing high to swing low, and you'll notice that this 50% level does seem to hold up quite a bit. Alright, so we came down, you can see what happened here already. That's basically where we came down before we headed higher. Came through, showed our resilience to move lower by bouncing off this trend line and come even higher. Okay, now just blindly taking a trade off the 50% is you know, it's hairy in the sense that we don't have a lot of other confluence factors lining up, and not to mention This could just be a short-term rejection. We might just, come down even lower. So what I'll usually do is I'll tuck the stop right around the 382 level, okay, just to make sure I have enough buffer, okay, to, in the event that it does come down and use that line of support, I'm not going to get stopped out unnecessarily, basically, okay, and that leaves us with plenty of risk reward ahead of us. And in fact, once we get up to another obstacle like this, we can just tuck our stop under and basically protect our risk at that point and let it run, okay. Now this is just one reversal switch trade. There's a lot of other scenarios like this. If I go over to GBP JPY, I can kind of show you what I was looking at yesterday, and that's basically the same thing. Now the measured move itself was actually on a shorter term basis. I was just looking at, I think I had this marked off, and you can see our rejection here on the 1 hour chart. Let's go down to a 15-minute, maybe it's a little more clear there. Okay, just a short intraday rejection. These things happen all the time. We come back and we just use this as support. It's a launch pad, basically, leaning into price. And then measured move, same thing, high to low. Okay, and we're going to the point in the trend line directly above the low of this swing, right there. Okay, and there's our target. Okay, 150.58, and you can see price basically knocked on into it and came back lower. Okay, so that's just sort of the general gist of that. So thought I'd just highlight that. If it helps, it helps. And that's about it for today. So thanks so much for listening, and I'll see you guys soon. Bye.